Hi, we're here to talk about using your automobile as a deduction on your tax return. If you're self-employed and use your automobile, you're allowed to take a deduction for either the actual expenses or a mileage deduction for the number of miles you use it. If your vehicle's used for both personal and business, you have to keep up with what percentage of it is business use. And that's the only amount that you can take on your deductions. For instance, if you drove 10,000 miles and you kept a ledger and said, okay, 4,000 of those were personal, then that would mean 6,000 or 60% of your expenses could be taken as a business deduction. Typically, you will either do the expenses as things like car payments, not your payment, but your lease payment, or all of your expenses such as gas, oil, repairs, registration, insurance, that sort of thing. That's one way of doing it. The other option is to take the standard mileage deduction, which, depending on which year it is, it will change from year to year. Sometimes it even changes within the year, but the IRS issues a specific deduction per mile that you can take. The requirement is that you keep up with your miles, and you have to be able to document what you used the car for and what the reason of the trip was, how far it was, and that sort of thing. They make, at your local office supply store, they make little ledger books that you can keep up with this, keep it in the car, and just each time you make a trip, just note the mileage. And then at the end of the year, you total it up and take your deductions.